Bit of a cautious day on the markets today. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, Wall Street appeared a little indecisive after the Fed's latest interest rate meeting. What's been happening on the local market?
Yeah, look, Wall Street actually was up about 77 points at its best and closed up 7. It did rally through the time when the US Federal Reserve had come out basically announcing that they will continue to commit to quantitative easing if necessary. In fact, quite interestingly, they were talking about that the inflation data, or inflation number, is now sort of outside of their mandated range. So for the first time, we're seeing a central bank talking about inflation as too low, which is certainly indicating they're wanting to see more activity, more economic growth taking place in the US. So it's more likely than not that we'll see the US Federal Reserve active in credit markets trying to stimulate the economy a bit more. Our market, which had a bit of a soft day, reversal day yesterday, was up about 23 points in early trading. Couldn't hold that. We closed up also about 7 points. Some good performances though, although mixed. CSL up nearly 3%. That was probably the best of the major companies. We had the banks a little bit mixed. However, Westpac was certainly the best performer of them all. And Wesfarmers and Woolies, the food staple stocks, up over 1%. Through the day. Otherwise a little bit soft, and gold's Newcrest down despite the gold price hitting a new all-time high, and that's probably been an effect of the Australian dollar impacting that $1 gold price. Yeah, the
Australian dollar, could it reach parity?
Look, there is some out there with a view that it might well do. We're at well over 95 US cents today. I think the thing's going to support the Aussie dollar will be if we do see further interest rate rises. That's now seeing more of a certainty to take place later this year, early part of next year. On our numbers, it would certainly suggest that if we saw cash rates move to 5.5%, currently 4.5%, the Aussie dollar will well and truly go through parity. What's more important in this case is would the Reserve Bank actively try and hold the Aussie dollar down. Now, a strong A dollar has a couple of effects. One of them, it will start to slow growth, and two, negatively impact inflation. So the Reserve Bank would be comfortable with that. It's really a question of how much of the effects would take place in regards to that A dollar move. So it does look like the Aussie dollar, with stronger commodity prices and rising interest rates, is heading towards $1 US.
Martin Lakos, thanks again for talking to Late Line Business.
My pleasure. Thanks, Tikki.
To the other major movers on the local share market now, and property developer Lend-Lease was up on news it had won $500 million worth of contracts with the US Army. Junior miner Truscott's shares almost doubled after emerging from a trading halt. Metcash was up, the ACCC delaying a ruling on the takeover of Franklin's until November. QBE Insurance was down 2%. Turning to currency markets, the dollar is still climbing against the greenback and is now trading close to 96 US cents. Onto the commodity markets, and in New York, oil is down. Gold hit another new high in today's session, $1,290 an ounce.